Welcome to another episode of Tax Sale Starters, where we bring you the latest tips and insights on tax deed and tax lien investing. Stay tuned. We have great information for you this week. Let's lead with, let's talk about this just a little bit more as we go into the IRS thing. I want to talk a little bit more about the IRS liens. My understanding of the IRS liens is if I get into a property, and this could be a strategy for someone, if I get into a property that has an IRS lien, there's a higher probability, again, depending on the values, the states, the thresholds that we're talking about, there's a higher probability that they're going to come in the next 120 days and take you out of your position. But what that means is you don't just get your money back that you invested at the auction and they just rip the property away from you and you're just out. You would get the interest that's associated with that investment based on what the state rules are or the county rules are for that investment. So let's just say if we're talking about Georgia, which is a penalty state, right? And they're going to give you 20% penalty. If they come in 120 days and take that property that you paid $100,000 at auction for, they're still going to give you the 100 plus they're going to give you a 20% penalty, right? Or they're just saying, here's your 100 back. You had no rights to get into this position. We're going to take it and your penalties are washed.
Well, I think it's a slightly different scenario altogether in most cases, because in reality, because that IRS lien is superior, it was never wiped out, right? They're not coming in and redeeming that property. They're basically coming to you as the proud new owner of that property, similar to like an EPA lien, and saying, hey, yeah, I'm glad you own this property. Now you're the proud owner of this $500,000 IRS lien. What are you going to do about it, right? And typically there's a negotiation involved, and really that only happens if the value of the property is high enough. But you've inherited that lien as the owner, right? It was never extinguished. They don't come in and redeem it and try to take ownership of that property and you get your money back. It's a scenario where now you're dealing with the IRS lien that's on that property. It was never extinguished, and they may take a discount, to what the original value is for them to go away. But they don't have any interest in owning the property. Otherwise they would have foreclosed on it, right? And I don't believe they even have the right to do that, but they have no interest in owning the real estate. They have interest in collecting their fee. And the way they see it is, you're an investor, you obviously have money. The previous owner didn't have the money, so I'm now going to come see if you can pay me. That's their motive.
Thank you for joining us for another episode of Tax Sale Starters. Don't forget to hit the like button and the subscribe button so you can keep up with the latest tips and insights in tax sale and tax lien investing. Also, check out Tax Sale Resources, where you can get the latest insights on upcoming liens and all that great information to help you be a better investor. Until next time, happy investing.